Hi, welcome to Market Flow. I'm going to do a quick analysis on the market. I'm going to share with you my thoughts of what I'm seeing right now, and as well about what I think it has been an important facts to share, especially things that have blown my mind and I want to share with you. If you find these things important, please share with others, like the button, subscribe, and click the notification button so you don't miss any of these videos. Real quick with the SPY, we had a green candle for the week, but it is not all that good, especially since we tried to break out of this range at one point and then quickly it was pulled down. This is a inverse hammer and is usually a bear signal. That means that bulls try to run away and then they were quickly cut back to the trend, and I don't like this right now. I was expecting to see a very green candle. That was what I was thinking for this week. That was a signal that will give me more confidence to the upside. However, after seeing this signal, I pull a lot of my positions that I had for swing trades for the long side and calls, and I did leverage all of that because I think we're getting pretty close to a top, and I'm gonna explain that why. One of the reasons why I think we're getting pretty close to the top is we had enough reasons this week to get a better get our gains on the market, specifically on the SPY. One of them is Jerome Powell message. The president could have done a lot. I mean, whenever he was talking about the infrastructure bill and the family care program, I think that could have sent a good positive message to the market, but that was not what happened. And then the other one is earnings. So these three events that happened during the week were either going to give you a signal that we're going to keep going up or we're going to keep going down. And the way I saw it is that we had enough reasons to sell, and then we had enough reasons to keep moving up in the market, and neither of those happened. And that's why at this point I took a lot of my positions out. I'm neutral right now, and I'm planning to see further notice on what's going to happen. However, I came a little bit more bearish after this week, and I'm going to share that why I think we're entering into a bear market, at least for the next few weeks. Some of the reasons why is the ones that I already talked about it. Earnings didn't move the market. Normally, the companies that reported, especially those tech companies like Apple and Microsoft and others, they had amazing earnings. And when those earnings come out and they're very positive, companies bought their shares. That's a normal behavior. They get rewarded. But when companies are overvalued or there is about to be a pullback in the market, this is a signal the institutions send to each other. They don't buy their stock. Instead, they sell it at earnings. And the reason why, it's because they don't believe the company it's in good value. And that's what most institutions do. They value the company even though it has good earnings. It's overvalued. They don't want to buy anything anymore. Even though retail may buy some of it, retail doesn't move the market. So that's a very strong signal that you have to follow. Every time there's earnings and the market doesn't move to the upside, or even if it moved to the upside like some of them did and then it sell offs like Microsoft, that is a signal that the market is not very bullish. And one of the things I wanted to share with you is what happens on May 2010. So right now we're looking at the market right here, and if I zoom out, the market has done very, very well. It has been following this channel for a few months, for over a year right now, and this has been one of the greatest bull runs of the market. Great returns. And for those who already make great returns, they're probably putting some of those in their pocket, and I don't see the market going forward with this. So if you're getting right now late into the game, I don't want to recommend anything, but my opinion is that right now it is late. The run has already completed it. I have counted it 3 waves to the upside, and we were currently in the last wave right now. My target was a little bit above it. However, this week that may change my mind because I was expecting a really green candle and that didn't happen, and we may have it next week, and that's fine if I'm out of it. However, the risk to reward, it's not that great, and I'll show you why. In the last crash that we had in 2008, this is the recovery. This was the bottom, March of 29. That was the bottom of the market, and then we had 3 waves to the upside, as you can see right here, and then we had a correction, and this correction lasted a few weeks. As you know, right now the chart that you're looking at, it's a chart of 1 week. It represents a candle, so it doesn't represent an hour, it doesn't represent a day. This is the type of chart institutions in long-term investments, they put their thoughts on. So they're not really looking at 1 hour or 1 day charts unless they want to get into a trade or initiate a position. But right now they went to an oversold territory. So after the crash, this was the first time that the market went into an oversold territory. You see this right here, all the way to the bottom, and then to oversold territory. This is exactly the same point that we are right now. This week we closed at oversold territory. That's a signal right now, and then on top of that we had a candle like this. You see that? Now this is my thought. We may get a green wick next week, and that would be awesome for anyone who's holding longs. But then after that, I think that we're going to experience a tremendous pullback. Right here in 2010, the pullback was about, let me measure it real quick. The pullback from top to bottom was about 17.5%. So now you can think about it. What will happen right now in the market if we have a 17.5% down? For many of those who doesn't know, well, I mean, it's not like you're gonna go 17% down on your portfolio. It's actually gonna go way below that, because a lot of the companies that, like tech companies like Tesla, they move their delta, it's a lot higher. That means like for every percent that the market goes down, they probably move 2 or 3%. So that's one thing to consider. We may experience soon a 17% correction. You can call it a crash, you can call it however you want. I'm not the type of person who likes to spread fears, but I want to manage my risk, and I created this channel to be able to document that, my positions, my thoughts, and maybe if that is helpful to anyone who is new into the market, can be able to take advantage of that and learn from it. Let's go back to our current date right now. So what would that happen if we have a 17.5% correction in the market? Let's see. So we have a 17% correction in the market right now. That will drag us all the way back to around right here. About right here. Let's look at the SPY. It's probably a lot better. Most people trade the SPY instead of futures. So 17.5% will be about right here, 350. That's probably the target, and that will be a backtest to this consolidation that we had back in November. So that kind of makes sense a little bit. And like I said, my thought is like we are in the top of the bull run right now. There's really not much risk to reward. Anyone creating longs, well, it is their own thing. But in my opinion, I think that I took some of my positions out. I tried to manage my risk, and I want to see what the Nasdaq looked like as well. This is what the Nasdaq looked like, and this one looks same, a little bit like a double top, negative divergence. You can see that right here with the RSI. We had never negative divergence in the past. However, we had this really bullish candle right here, and it was able to blow out of that negative divergence, and that was a signal for a few more weeks of the bull market. And that's what would happen after that. And then once we got to the oversold territory again, sold off. Now it's making another negative divergence, and I can see that coming down again. Let's look at QQ. So again, if QQ will come down 17%, that will bring us back to about 280. That's kind of my target. Again, I don't know if it's gonna come out all at once, if it's just gonna trade sideways, if it's going to be sort of like a slowly coming down in a bear market trend. But if we look at 2006, 2010, again, let's see if we can go there. 2010, May 2010. There you go. If we look at May 2010, things went fast, very quick. In 1 week we had a red candle, and then after that 1, 2, 3, and actually just took 1 week. We hit the bottom in 1 week right here. It quickly bounced off. Nonetheless, it traded on this range for a few weeks. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks, and then all the way to June. That's when we start bouncing. Now think about it, how many call positions right now they are for June. I had a few of them that I closed this weekend, and the reason why I had it for June is because normally April to June there is a bull trend on the market. However, when I was looking at this chart, it made me rethink that maybe we are about to get into a bear market right now. And so I managed my risk, I closed my long-term positions, and I went neutral. I'd rather go neutral than experience a massive loss. So if you're the type of person who are a long-term investor and don't really mind adding up to positions that are losing a lot of money, go ahead, good for you, you can do that, that's not a problem. But then for anyone who may sold at a loss, be careful, because you don't want to sell on a loss. You want to sell at strength when your positions have some gains. Otherwise, you're gonna keep losing money on the market. Let's go to current date. So from top to bottom, that was a 17.5. Same as the SPY, not much of a difference, and that makes a target of this right here, 286, 82. So again, I mean, I don't call this a prediction. Those are my thoughts. And then I was looking at other stocks that could support my thesis to this specific point, and I'm gonna go over them real quick. So again, at this particular point, I think I already share my thoughts on the SPY, on the QQ, and I'm gonna go through other stocks that can be a good play for the downside. So if you want to stick around and you can look at it with me, go ahead. But let's look at semiconductor STMM, and I think this company is doing well. There's a shortage on semiconductors, and there's a lot of people who are betting on this type of companies because of the shortage. They're increasing their prices, they're selling quite a bit. However, the chart does not say the same thing. The chart has already gone out of the trend, and normally when you get out of the trend, there's a back test, which already happened. This week was a confirmation where there is sellers at this particular point, and we had a bearish candle right here, inverse hammer, not as bad as other companies that we're gonna look, but nonetheless this is a bearish candle because I was expecting, like I said, a really blow off top candle, getting back into the trend and then continue with it. However, I think this is the top for this position. Look at the negative divergence. My target price right now and the next support, it's about $31. So there you go. Now, are we gonna get here in a couple days, in the next few? Who knows? I'm not exactly sure, but This was a signal of a sell-off. We got a dead cat bounce. We are certainly going here. MPA is another company who's been selling off. It's right at support and inverse hammer. OLED has the same type of chart that the other semiconductor company has. Let's see if I can, yeah, a little bit slightly different, but the same thing. We had a sell signal right here, impulsive sell, dead cat bounce, and then if we lose this part right here, my next target will be about 163. FNGU, there we go. I see the same thing too here. Sell off, dead cat bounce, coming back all the way to 1626. All of these charts look like this, and it's incredible to see that the SPY doesn't look like this, and that is what it has been making people think that you know, we're still in a bull market, and I was kind of in that impression as well. We're right at the edge right here, but again, it looks like we sell off, dead cat bounce. This is the bearish signal, a inverse hammer, so we got that there. All the semiconductors right now, they look like that. They got out of the trend, they backed it. The best entry for this market was right here. You will enter your short position right here, and then right now you will be very happy making some money on the way down. And then if it ever bounces back, well, you had a good return. NXPI hasn't broken the trend, however it had a really bearish candle last time, but not so sure about that. ROKU, same as well. This looks like a dead cat bounce. If it breaks this trend line right here, the target's gonna be about $200. And now you may think, why is it gonna sell off so much? Well, back in May, lows May, this one was trading about $54, and its previous highs was 175. So from one year to the other one, I don't think 200 is going to be the price. It may find support before then, but $240 for a stock that was trading 174 last year, I think that's where you can find market value. Again, none of these are predictions. This stock can bounce. I mean, I believe in these companies, they're great. Spotify, again, after earnings, big sell-off, currently at support. Is this a buy or a sell? In my opinion, it's already broke down the trend. The trend was right here, it broke down, it did a back test, and now it can next support about 179, 195, 197, and that will coincide with the top right here. Yeah, and it's not I mean, it is not difficult to see these type of things in the market right now. For anyone who's new to the market, it may seem like stocks only go up, but if you look at past years on Spotify, look at this. It trades sideways for a couple years. Even when IPO, it sold off, sold sideways for a couple years, and then it recently got this trend right here. So support can be down here, and that should be a good price. Same with W right here. It looks like it just broke this wick. This was support, this was the trend right here. But look at this impulsive moves. Double top right here. Worst case scenario target is right here, 229. I can go on and on and on with all of these ones. And after this week, you can see that they are pretty they can start a bear market. So anyone initiating a long position, be careful. Now let's look at some other things, right? Like I can go on and on with all these shares on all these stocks. I don't want to get you bored with this, but I want you to look at other things too. What insiders are doing. Let's go with Shui. Let's start with Shui. What insiders are doing. Great, right? If the company is amazing and then it just got upgraded, who cares about the upgrades at this particular point? I mean, institutions may be upgrading these stocks just so they can get out of their positions at good prices. Yeah, I mean, I'm not exactly sure, but look at this. I mean, well, sure, it's not too bad of a valuation in my opinion. They're making sales of $5 billion and they have a market cap of $4 billion. So again, it's not awful of a company, but look at this right here. April 27, this is recent days. Insiders have been selling in the millions of dollars. 11, 7, 6, 4, 9, 5, 60. It looks like it's probably the same guy right here and another one, but then it has been the case right here as well. A lot of selling, and that doesn't give me a lot of trust on the company. I don't know, maybe right now my sentiment is bearish and that's why. But let's look at this one. Microchip, MCHIP. Okay, let's look at Microchip. Let's see what's happening here. Again, I mean, the sales was not too bad. The biggest sale was right here, $4 million, and that was in February. In November, I mean, I don't know. I mean, this type of sales are not as bad. Blink is one of them that it's currently in a negative divergence. It had this triangle right here. It broke to the downside. It back tested. It had a bearish hammer. See what insiders are doing here. Oh my gosh, yeah. This were selling pretty heavy on January and February. I mean, these are not big sales. They were buying they were buying at $6 and $2, and then now they're selling at $40, $50. And of course that makes sense. Back in this time, I noticed that they were buying at this time, and that was a great time to buy. But you have noticed that when they get out, it's a good time to get out as well, because they don't see much future in the company. Yeah, they were buying down here as it was coming down. So there you go. You're not gonna find much buyers right now in this type of companies. DOG is another one. This is the trend line right here. It broke. It's doing a back test. If it sells pretty hard, 51 is probably a good target. There is really not much support in between. So let's look at DDOG and what insiders are doing. Again, it got upgraded, but I was not on April. One upgrade, a couple upgrades. I mean, but it's a company that market value is $27 billion, and they're only generating half a billion dollars in sales, not income. Of course, this is a PE ratio that is really high. Let's see what the insiders are doing. Yeah. I mean, what do you think they're gonna be doing? Buying at these prices? Will you be buying at these prices? Man, these people are getting out. And then I don't really care much about those who are selling less than $1 million. Like this guy, who knows, you know, he probably just wants to buy a house or boat, whatever, and he wants to take a little bit of money out. But then people who are selling in the 20s, tens of millions of dollars, all of these guys right here, they were selling in March. Look at all this big sellings. Look at these ones, big sellings. These are CTO, CEO, like all of these guys. And if you think that people are getting poor in COVID-19, actually it make the richer richer. Anyone who is holding an executive position during COVID, they made their Christmas. They make more money that they haven't ever made in their entire life. That is for sure. They can probably retire tomorrow. Look at all these people. They can probably retire tomorrow. Like the example with GameStop, and I believe the CEO, the CTO, anyone who were getting paid in shares, those guys were the real winners. I mean, the retail guys who were buying at $50, at $100, and they're holding right now. Okay, yeah, they have some merit, but the real winners were the executives who work at GameStop, and they had shares or options in the $5 range. Those were the winners, and they didn't have like $1, $2, $3 million. They had more than that in GameStop at $5 range. So anyway, that's how things work right here. So it does pay off to work in an executive position at a public company, for sure. You get great benefits. They had their Christmas. Let's see, purple is the same thing. It sold off. It's doing a back test, and if I go right here, let's see, purple innovation. I mean, all of those are great companies, but everyone is selling. Look at this, 33 million sold March 5th. This guy, what price is the company? 34 March 5th. Oh, well, that guy got screwed, I guess. March 5th, yeah, it was like right here. Either he sold right here and he made this big gap. That could have been the case. Maybe he sold right there, but I don't see anyone buying. Yeah, I think this is it for right now. Thank you for watching. Subscribe if you like the content. Again, I'm not a professional value investor, so I cannot tell you very much about valuations, but some of them have, of course, really high valuations, above average, and we are definitely in a bubble. I don't want to deny that. Right now with AMD, if it breaks this channel, look, it was about to break out this week, and then it got this very bearish candle. If it breaks down here, we're heading back to the next level, 59. I would like to buy AMD shares. Of course, I would like to buy 100 AMD shares, but would I like to buy them here, or would I like to buy them here? Now I'm gonna share my strategy with you right now. I don't have puts right now with AMD, but on Monday, hopefully, I cross my fingers, we don't sell off and we have a green candle. I'm gonna buy, if we do have a green candle or we stay at the same level, I'm gonna buy AMD calls, puts at the maybe like 5 months from now, for July, maybe August, at the 59 level. And when you buy them like that, I think they're pretty cheap, and then they're gonna gain a lot of extrinsic value. So my thought is like buying, who knows what can I afford, 10, 5, and then as it comes down and then maybe it reach this level, I can sell one of them, and then that will pay it off a little bit for the options. And then as it comes down and then it reach this level, I can keep 2 and then sell another 2 of them. When then with the money that I make, I can buy maybe a call or 2. I wouldn't buy calls right away just because I think it's going to consolidate, but when I see signs of reversals, I'll probably buy calls. But on the first move, I don't think calls are going to be the best thing to buy, but shares should be fine. So I'm planning to buy shares Maybe a call for the short-term bounce. I think that would be fine. But then I want you to know how do puts work. Whenever you buy puts at this level, their value is really cheap because you're buying them way outside of the money. You're giving yourself a few times. So let's say you buy them for $20 right here and I buy 5 of them, so I spend $100. And then once it reached this point right here, well, their value is going to be, who knows, $300. So you make 3 times your money. At that particular point, you can sell some of them, right? Make some gains and then keep 2 of them. Why would I keep 2 of them, or at least 1? Is because I'm planning to buy 100 shares. I'll buy 100 shares here. I'm gonna keep 1 of them. I'll sell 4 and I'll keep 1 of them. And the reason why I will keep 1 of them, even though I could make some money of it, is because if the stock keeps falling, and then that it's going to that's going to be my insurance, pretty much. That's how options work. I mean, you can gamble with options, but the way I see it is I buy 5, sell 3 of them here, I make some money, and then I keep 2. And the reason why I keep 2, it's because I want to buy 100 shares here, and then if it comes down to the next level, I want to buy another 100 shares. And what does that mean? Well, I have protection now for my 2 for the 200 shares that I buy. So if I buy 200 shares at this particular point, and then I have 2 puts that are gonna pay me $50 or $60 per share, then I'm protected. If this thing goes to 0, or if we get all the way to maybe 40, 20s levels, like whatever my time frame is for my puts, someone's gonna pay me the $60 for my shares, and I'm gonna lose 0 money. I actually made money because I sold the other 3 puts, and then I keep 2 of them, and then they are protecting me now from the downside. And then with those shares that I have, I can sell cover calls and then make more money out of them in case we keep going down. So anyway, that's how I play, or that's how I catch knives. I try to, like, right now it's a great opportunity to buy puts, and then with the solely purpose of buying shares. That is my play for this one. AMD, I think it's a great company. I want to buy it at a good price. But yeah, again, all of them look like this. They got out of their trend. I wish I would have looked this earlier, and then this week I would have buy puts or more puts. But again, you want to get a confirmation that we got the final dead cat bounce. So I can expect the VIX to increase quite a bit substantially in the next coming days, since a lot of people is gonna see this. But anyway, if you like the video, subscribe and share it. Thank you for watching. I hope this information is useful. Again, if you look at insiders and what they're doing right now, everyone is selling, no one is buying at this time. So that is just a signal. There is 3 signals that I got that we're in a bearish market. Every insider is selling right now. They're selling millions and millions of dollars. They don't want to have they don't have their options in their company. 2, Biden and Powell, when they talked, they didn't move the market to the upside. We didn't have a breakout. We actually had a fake breakout, which means it went above and then it came down real quick and it created this bearish hammer. So that was the 3rd thing. And then the 4th one is earnings. Usually when companies are undervalued and they're performing very well, they are going to have really good green candles after earnings, and that didn't happen. So again, I mean, I can go on with other things, like the evaluation of the companies. I don't go with the valuation of the companies, because the valuation of the companies can go way above and beyond, and so that's not really something I measure to know whether we're going in a bear market or not. But looking at the charts, that can give you a good picture of where we're going. The RSI can tell you kind of where we at, not the daily, not the hour, but then maybe the weekly, maybe the monthly. Those are better signals for investors. And so when I combine all of them, I don't think there is much upside in the market right now. Again, my targets in this bear market can be dramatic. We can have a dramatic sell, or we can, worst case scenario, we can just go sideways for a very long time. And that's my thought. There's one more stock that I wanted to share here before I close the video. Let's see, DE. I think it's worthwhile sharing. Look at this thing, big impulsive wave. Oh my goodness. Like, let's see what insiders are doing right here. Are these guys, oh, I click on the wrong one. Are these guys buying or selling? What do you think? I mean, this is the future, right? Now they're selling pretty heavy. Look at this, $10 million, $1 million, $2 million, $2 million, $5 million. Like, all these guys are getting their Christmas, man. I mean, I won't be surprised if all of these people retire. And why are they getting their money out? Well, maybe next year they're gonna get taxed for it, or higher taxed. But oh my goodness, I mean, I'm jealous of not being able to have one of those executive positions, because otherwise right now you would have been a multi-millionaire if you would have otherwise. So when we talk about the gap getting bigger and bigger and bigger between the rich and the poor, yeah, that's what that is. And really, I mean, it's not traders who got richer or investors, it is the executives for the most part who got richer. So yeah, I mean, this thing looks like it's gonna come down heavily anytime soon. Look at the RSI, and we're looking at the weekly right now. So this one right here, it's a great short. Why? Because it's still holding momentum, and of course it's really oversold. And if I look at previous years, now this is not like, oh my goodness, we never had a bull run like this in the past. No, we do. DE does that. Like, people who professional traders know how stocks move. And yes, look at this one. This is 2006. So from 2006 there was a correction in the market. Look what happened with DE. It went from 75 to 173, so 100 points more. And if one thing that I wanted to share with you, and this is the last thing before I cut the video, and I hope you found value in the video, 20%. So look, we were 20% away from the 200 moving average. Where we at right now? Now we have the sell signal right there. Look at those candles. Where we at right now? 30%. Man. Now you know what to do. I hope you found this video useful. Trying to make it clear. I know I'm not really good at doing this, but I'm trying my best to get better at it. Please share it and like the button so I know that I can continue making these videos, and hopefully I can help the retail traders to make money and lose less. So thank you for your time. If you are here till the end of the video, make a comment below, say, hey, I watched the whole video, thank you for your insight, whatever, just something that can tell me that time is worthwhile doing it. Anyway, have a good day.